sesh on dividends. So dividends are a distribution of a percentage of the profits by a company, private limited company or a public limited company, to the shareholders. The actual size of the dividends will be decided by management. In terms of how it's paid by the company to the shareholders, it is usually paid in cash on an annual basis, on a semi-annual basis, or on a quarterly basis every 3 months. In terms of the way that dividends are accounted for, they will be accounted for on the statement of financial position, not the income statement. If the tax has been paid, interest has been paid, and you've got the profits, the dividends have been paid, and there is still some stuff left, there is still some profit left, that is referred to as the retained earnings. The very last amount of profit that is left is the retained earnings, which will form part of the wider retained profits of the business, being the historical profits that the business has basically got, sometimes just referred to as cash. So dividends will have time frames that are good to know. The first is the declaration date. So declaration date is simply when the managers say that we are going to pay a dividend this year, because they don't have to pay a dividend. They say we are going to pay a dividend this year and it is going to be paid on the 15th of April. But today is the 1st of January. So the managers have declared that they're going to pay the dividend. That leads to the second date. The second date is the in-dividend date. This is the date by which the shareholders must own that share. They have to own it on that day. We could say that's the 13th of April. And if they own it on that date, then they are eligible. They qualify for the dividend to be paid on the 15th of April. The other date to know is the ex-dividend date. This could be the day after, so we can say on the 14th of April, if you're to buy a share in this business, well, you do not qualify for the next dividend being the next day, tomorrow, if you buy a share on the ex-dividend date. And the final thing to note is obviously the dividend payday, which we've put here as the 15th of April. But it's important to note this because you can hook this into influences on share prices. Because a very common theoretical argument is that on the ex-dividend date, the date by which, if you own the share, you're not actually eligible for the dividend to be paid, in this case, tomorrow. Well, that might see a sell-off because they're not as attractive, those shares right there, because you don't get that special dividend the next day. So in terms of influences on share prices, more details on the card up there, well, you could argue that on ex-dividend date is when share prices may actually fall because you do not qualify for the dividend the next day. Other things to be aware of is issues with dividends. So the first is opportunity cost, because if you, managers of your company, decide to pay a massive percentage of dividends, well, what's the opportunity cost here? What else could you have got? What's the next best alternative? Could you have invested in research and development? Could you have invested in workers, training or wages? Could you invest in some form of capital, some form of machinery? Could you, as Amazon are planning to do, a very audacious move, is to vaccinate their entire supply chain? Could you do that? Number two is short-termism and myopia, or to be myopic, to just be thinking in the short term, because that's what's possibly, and dividends create that environment, because managers are so focused on their shareholders and keeping their shareholders happy by paying them their divvies that they just focus on their shareholders and they're not focusing on other stakeholders. And also, when you are just focusing on paying your annual or your semi-annual, your quarterly dividends, well, you're not thinking potentially about the long-term viability, the long-term sustainability of your company, because you're so focused on the short term, paying those dividends so they stay invested in your company. I hope that helps with dividends. I'll see you in the next session.